All right, so let's dive into the stock market today. You ready to look at some big winners? And of course, got to look at least one big flop too, right? We're going to be looking at this article from the Motley Fool. It's called Four Stocks to be Thankful For and One to Avoid. It came out pretty recently, actually, just yesterday, November 28th, 2024. And what's interesting here is this article, it comes out during a year where the market's doing really well overall.
Yeah, that's super important.
Yeah.
You know, when the whole market's up, it's easy to just think, oh, everything's going great.
Yeah.
But even then, some companies are going to stand out. You know, some for the better and some not so much.
Exactly. And that's what we're going to be looking at today. So this article, it highlights NVIDIA, ticker symbol NVDA. As a company that's doing really well, a top performer, investors are feeling pretty good about it this year.
Yeah, and, you know, their market cap is massive, $3,314 billion. So It's easy to see why people are excited. But the article did mention a little dip recently. On the 27th, it went down 1.15% to $135.34.
Oh.
But, you know, I got to say, in the grand scheme of things, that's not that big of a deal.
Yeah, I mean, that's not really enough to scare anyone away. But it does make you kind of wonder, what's the reason for all this success in the first place? The article doesn't get into specifics about that.
Well, NVIDIA is basically the leader when it comes to AI chips and that whole sector. It's absolutely booming right now. Artificial intelligence is just getting bigger and bigger. So the demand for these chips, it's huge.
So they're right in the AI wave. Makes you think, though, is that going to last long term? Competition is fierce in the tech world.
That's the big question, isn't it? NVIDIA is definitely ahead of the game right now. But other companies are putting a lot of money into AI too. So for NVIDIA to stay on top, they're going to have to keep innovating. They got to figure out what's next.
It really makes you realize how fast things change in the tech world. Like something that's popular now could be old news really quickly.
Exactly. And that's why you got to look beyond the hype. You got to really try to understand a company's strategy, their long-term potential.
Okay, so NVIDIA is a big winner. But the article also talks about 3 other top performers. The thing is, it doesn't actually say their names.
That's where things get a little more interesting. It's like a little stock market puzzle.
Oh, I love a good mystery. So what do you think? Any guesses on what these other big winners could be? We know the market's doing well overall, but what sectors or industries might have really taken off this year?
Well, 2024 has been a big year for renewable energy. So maybe one of these mystery stocks is in that space, like solar panels or wind turbines.
Yeah.
Or even battery technology.
Oh, yeah, that's a good possibility. And remember how everyone was talking about the metaverse last year? Maybe one of these companies is doing well with that, even though it's not as hyped up anymore.
Yeah, it's all about figuring out who's actually making things happen, who's delivering on all those big promises.
Separating the wheat from the chaff, you know.
Exactly. Now, I know some of our listeners might be a little frustrated that this article doesn't give us all the answers. But think of it this way. It's a challenge.
Challenge accepted. So how could our listeners figure out these other winning stocks? Should they be looking through all those financial reports?
Well, they could do that for sure. But honestly, it could be simpler than that. Just pay attention to the news. See what companies are making headlines. And, hey, maybe even check out the Motley Fool's premium services. They might have the answers right there.
Oh, yeah, good point. I always forget about those premium services.
Yeah, I get it. There's just so much information out there. It can be overwhelming. But if you're serious about investing, those services can be really helpful. They can help you cut through all the noise and focus on those really promising opportunities.
All right, so we've got our big winner in NVIDIA, and we've got this mystery trio of top performers. But remember what this article is called: 4 stocks to be thankful for and 1 to avoid. So let's talk about the one that didn't do so hot.
Yeah, unfortunately, just like with those other winning stocks, this article keeps this underperforming company a secret. They don't give us a name. Just a warning to stay away.
Oh, man, what a cliffhanger. So even in a market like this, where things are going so well overall, there are still companies that struggle. What could cause a stock to do so badly, even when it seems like everything else is going up?
That's a great question. And I think it's something we should really unpack in the next part of our deep dive.
Sounds good to me. But before we get there, maybe we could brainstorm a bit about this mystery turkey. Are there any sectors or companies that you think might be doing badly, even with the market being so strong?
Well, I've been keeping an eye on the traditional retail sector. E-commerce just keeps getting bigger. So those brick and mortar stores are having a hard time keeping up.
Oh, yeah, that's a good one. I mean, I do most of my shopping online these days. It's just so convenient.
Exactly. And then you've got those supply chain issues and inflation. Those are hitting certain industries especially hard.
Good point. And let's not forget about how consumer preferences change. What was popular a few years ago might be completely out of style now.
Absolutely. People's tastes change all the time. And companies that don't change with them, they're going to fall behind.
So we don't know the name of this underperforming company, but we do know there are a lot of potential problems out there, even in a bull market.
That's right. That's why it's so important to do your research. Understand the risks before you invest in any company.
Couldn't agree more. We'll be back in a bit to dive deeper into those risks and explore some ways to navigate the market with confidence.
Welcome back. We were just talking about how even in a good year for the market, there are still going to be some companies that struggle.
Yeah, so before the break, we were trying to figure out why a stock would do badly, even with the market performing so well.
Like the overall market doesn't always tell the whole story, even if the tide's coming in. Some companies are going to have trouble staying afloat.
So what are some things investors should watch out for, like warning signs that a company might be heading for trouble?
Well, I always start with the financials. Things like their earnings reports, balance sheets, cash flow statements. Those can really tell you a lot about how healthy a company is. Like, are they making more money? Are they actually making a profit? Are they handling their debt well?
Yeah, that makes sense. But I gotta say, those financial reports, they can be kind of scary, especially if you're not a financial expert. Any tips for understanding all those numbers?
Oh, yeah, don't worry. You don't have to be like a Wall Street whiz to get the general idea. Just start by looking for trends. Like, is their revenue consistently going up? Are their profits increasing? If you see things going down, that could be a bad sign.
So it's not just one bad quarter, it's more like a consistent pattern of not doing well.
Exactly. One bad quarter could happen to anyone. But if it keeps happening, that means there might be a bigger problem.
All right, so we've got financials as a key indicator. What else should we be paying attention to?
Well, besides the numbers,
I
also look at the management team. Are they experienced? Do they have a clear plan for the future? Are they making smart decisions? Because a company with bad leadership, they're probably not going to succeed, even if the market's doing well.
Right. It's like having a captain who doesn't know how to steer the ship.
Exactly. And then there's competition. Every industry's got competition. Some are tougher than others. So you got to ask, is the company keeping up with its rivals? Are they coming up with new stuff, new products or services? Or are they falling behind?
So it's not just about the company itself, it's about how they fit into the whole market.
Right. You got to understand the competitive landscape and figure out if the company can actually do well in that environment.
It's kind of like chess. You got to be thinking a few moves ahead.
Yeah, exactly. And of course, we can't forget about those things that can happen outside the company, things that can mess up even the best plans, like recessions, geopolitical stuff, natural disasters, or even just changes in what consumers want.
So even a company with good financials and a great management team could still get hit by something they can't control.
That's the thing about risk. There are always going to be unknowns. But good investors try to think about those risks and consider them when making decisions.
So even when things are going well, you got to be aware of the potential problems.
Exactly. And that's why it's so important to diversify. When you spread your investments across different areas, you're less exposed to any one particular risk.
Don't put all your eggs in one basket, right?
That's the idea. Diversification is one of the best things an investor could do. It helps you get through those rough patches and come out even stronger.
So we've got financials, management, competition, and these unpredictable external factors. Any other warning signs investors should be looking for?
Well, this one's a little harder to explain. But I always pay attention to a company's culture and values. Do they treat their employees well? Are they environmentally responsible? Do they do business ethically? More and more investors are thinking about these things.
So it's not just about the money anymore. Investors are looking at the bigger picture.
Absolutely. People want to invest in companies that share their values. And studies show that companies with strong cultures and good ethics, they tend to do better over time.
It makes sense. Happy employees, happy customers, happy investors.
Right. It's all connected. So financial analysis is super important, but don't ignore those other factors.
Great point. Now, I'm sure some of our listeners are feeling a little overwhelmed. With all this talk about risks and warning signs, it can make investing seem pretty scary.
I get it. But here's the thing. The more you know, the better decisions you can make. And remember, even the best investors make mistakes sometimes. It's all part of learning.
That's good to hear. So it's not about being perfect. It's about doing your homework and being ready for the ups and downs.
Exactly. Investing is a marathon, not a sprint. There will be bumps along the way,
Yeah.
but with patience,
Yeah.
discipline, and a willingness to learn, you can navigate the market with confidence.
So we've talked about a lot, from financial analysis to competition and those unpredictable events that can happen. Any final thoughts before we move on to the last part of our deep dive?
Yeah. Just remember this. Investing is more than just picking stocks. It's about building a financial future for yourself and your family. It's about making your money work for you so you can achieve your goals and live the life you want.
That's a great way to put it. It's not just about the numbers. It's about what those numbers mean. Freedom, security, opportunity. That's definitely worth working for.
Absolutely. So stay informed, stay curious, and keep learning. The world of investing is always changing. There's always something new to discover.
All right, so welcome back. We've looked at some top-performing stocks, tried to figure out those mystery winners, and even talked about those potential market risks. What should our listeners do next? How can they become more confident investors?
Well, knowledge is power. The more you know about the market, the better decisions you can make.
Okay, but where do you even start? There's just so much information out there.
Yeah, it's true. It can be pretty overwhelming. But the good thing is, information's more accessible now than ever before. Start with those good financial websites, news outlets, even some educational platforms. There's tons of stuff out there for investors of all levels.
We've been talking about the Motley Fool today, and their article kind of started this whole conversation. Would you say they're a good source of information?
Oh, for sure. The Motley Fool is great. They have free articles and podcasts, and even premium subscriptions with more detailed research and stock recommendations.
Yeah.
It really depends on how deep you want to go.
So if our listeners are interested in those mystery stocks, maybe checking out Motley Fool could be a good next step.
Definitely worth a look. And of course, there are lots of other good sources out there too. It's about finding the ones that work best for you. Ones that fit your goals and how much risk you're comfortable with.
Right. It's all about find the right tools for your own journey.
Exactly. And speaking of journeys, you really need a good investment plan. It's like going on a road trip. You need a map or you'll get lost.
So what makes a good investment plan? What should our listeners be thinking about?
Well, first, you got to figure out your financial goals. What are you hoping to achieve with your investments? 7 for retirement, a down payment on a house, or maybe just growing your wealth over time. Once you know what you want, you can figure out your time horizon, like how long do you have to reach that goal? And then you got to think about your risk tolerance. How much are you comfortable with things going up and down? Answering those questions will help you create a roadmap for your investments.
So it's about making sure your investment strategy matches your goals and your situation.
That's it. And don't forget, investing is a long game. It's not about getting rich quick or trying to time the market perfectly. It's about investing consistently over time and letting compounding do its thing.
Compounding. That's where your earnings start making their own earnings, right? Like a snowball rolling downhill, getting bigger and bigger as it goes.
Perfect analogy. It's one of the most important things about investing. Even small, consistent investments can grow a lot over time, thanks to compounding. But the key is patience. You got to let it happen naturally. Don't get discouraged by little ups and downs in the market.
So you're saying you got to trust in the long-term potential of the market.
Exactly. Now, I know all this talk about plans and strategies can seem kind of scary, especially if you're new to this. If you're feeling overwhelmed, talk to a financial advisor.
Yeah, a professional advisor can help you come up with a plan just for you, answer your questions, and give you support along the way. It's like having a co-pilot for your investment journey.
Couldn't have said it better myself. And remember, there's nothing wrong with asking for help. It actually means you're a smart investor. You want to make good decisions.
So as we wrap up today, what's the most important thing we want our listeners to take away?
I think it's this. Investing is a journey. You're always learning and growing. Enjoy the process, stay informed, and keep learning new things. The market's always changing. So be flexible, be curious, and never be afraid to ask questions.
And remember, investing doesn't have to be scary. With the right resources, the right strategies, and the right mindset, you can be a confident investor and reach your financial goals.
Well said. So to everyone listening, take what you've learned today and start your own investment journey. There's so much potential out there, and I know you can succeed.
That's it for today. Happy investing, everyone.